Folks, Dick Morin here with Consumers First Mortgage, bringing you another Consumers Moment. Thanks for tuning in. The topic today is preparing your buyer. Industry changes have been phenomenal. We don't see the same mortgage loan requirements today as we did as recently as 2 months ago or even a month ago. Anyone who says that life is great in the mortgage industry is blowing smoke or maybe getting ready to retire. I'm not sure which. We all fish from the same pond, so guidelines are guidelines. It's very difficult to remove yourself from them. You may be able to have a slightly different interpretation, but let's face it, the bottom line is we all have to prepare the same loan file the same way and get to the finish line together. A mere 1/8% can result in a $20 a month payment difference for your customer. 1% difference can be as much as $90 to $100 a month. So in that case, there is a significant difference between one lender and another. And that's what we look for, is the lowest price and the best performing lenders that we can find. I think the key to success is proper preparation. And let me tell you, there are some common elements in this mortgage industry, and I'd like to share with you a few of those. Some of the common things that go south on us, well, loan documents are a statement of financial position. What I say today when I sign that document has to be true for at least the next 30 to 45 days. So tell your borrower, no buying another car, snowmobile, plane, boat, or other recreational vehicle. It just shouldn't happen. Tell them to hold off until after the loan closes. If your borrower shops each and every time that they meet with a lender, they're going to likely run credit. That doesn't hurt their credit score necessarily, but it does show up as an inquiry on the credit history. So those inquiries have to be addressed, and that's simply done by a quick memo to the file signed by the borrower saying, I've been shopping for credit at these places and so forth. Names have to be accurate. Richard Morin, Richard A. Morin, and Dick Morin are all the same person to you. That's me. However, if Richard A. Morin shows up on the purchase agreement, then Richard A. Morin has to show up on the loan application. Loan agreements have to state names, and the as assigned no longer qualifies, because then you have to go back and show an addendum that possibly the purchase agreement was assigned. Lenders are just not accepting that anymore. So have the names match, have the names consistent throughout, and if a borrower cares to be, they need not be a buyer, but they can be a borrower on a loan to shore up the transaction. The money trail has to be verified and documented. Quite often, borrowers will begin amassing money into a primary account in preparation for their purchase or even their refinance. And when that happens, we have to document where those funds are coming from and what exactly they are. They're a little inconsistent with the regular payroll deposits that we see in the account, and that's the purpose and the reasoning behind that. A bank statement is a bank statement. A computer printout is a computer printout, unless the printout has the borrower's name, the account number, the institution name, and a 30-day history. That's what we're looking for, is 30-day histories. In fact, 2 30-day histories, 2 months of history bank statements is what we're asking. When a borrower is buying a second home, we're going to verify their primary residence cost. That's through a mortgage statement, tax bill, insurance bill, verifying what the costs of carrying that are. That's how we calculate debt-to-income ratios. So have your customer keep in the back of their mind, if this is a second home, that we're going to need to know information about their primary. Job changes have to be addressed. I have a borrower who's changing from a $90,000 a year job to a $60,000 a year job. I need a memo. Why is he doing it? And that he's consciously aware that this is occurring. Borrowers moving up and down need to explain their purpose and their rationale behind it. Probably less so on the upward movement. Overtime has to be documented. Part-time jobs have to be documented. You can't take a part-time job today to qualify for tomorrow. There has to be a history. Some say, oh, don't worry about it. Well, I'll tell you what, those people are getting ready to retire, if you ask me, because loans are loans and we have to meet the guidelines. And the fastest way to the finish line is to meet the guidelines, answer the conditions of underwriters. When an underwriter surfaces, I need another bank statement, instead of arguing that that's silly and we shouldn't be bothering with that, get it, let's get it done. We all win when we get to the finish line sooner than not. So rather than fight conditions, let's just get them approved. I've attached to the email a handy checklist that you can provide to your customer in preparation for their mortgage application, wherever that may be. I certainly hope it's with me. Thank you much for what you've sent my way. I appreciate it. We're here to do more, and if I can help you in any way, certainly give a call. Thanks for tuning in. We'll talk again soon. Bye-bye.